All right, can you hear me? Great. So, good afternoon, everybody, or good morning, wherever you are on our planet. Um, my name is Bastian Rubin, and I'm Sunbirdfx Chief Analyst. Welcome to my webinar about technical patterns. This is the subject today. I see some familiar names today here, so hi again. Those of you who are not familiar with me, as I said, I'm Sunbirdfx Chief Analyst, and you can hear or read my reviews almost every morning on forexpros.com. And so what we're going to talk about today is something that I usually write about almost every analysis that I publish, and this is the technical patterns. All right. So most of you probably heard about many technical patterns, which most of them we're going to talk about today. But my point of view is pretty different from what you've heard before. And those of you who read my analysis every morning know that I look at the charts differently than other analysts. All right. So why do we need to look for technical patterns actually? You know, when you look at a chart, sometimes it looks like chaos, especially if you are a beginner, or just your first time, or you're taking your first steps in Forex. When you're trying to analyze a chart, sometimes it's very confusing. So the technical analysis aspect, try to put some shapes to different patterns, and that help us to organize this chaos, this chart. And if we can get prepared better, and we can analyze better, we can get prepared better to different market situations. I will talk about strong or weak breakouts or breakouts. So if we know how to analyze different patterns, and we can determine accurate potential entering levels, our trading will be much more efficient. All right? And the thing is, and that is something that most of us don't pay attention for, is the psychology of the patterns, or the psychology behind the candlesticks, the Japanese candlesticks. And this is what we're going to talk about today. We're going to review some common patterns, and we're going to look at them from different angles. All right. So what do we need to know about technical patterns? What should be our agenda when we are talking about this issue? So knowing how to spot them, the technical patterns, is actually the key, all right, to understand how the trading works. However, not every technical pattern that you spot is a cause for opening a position. Let's say that you spot a really nice cup and handle pattern, and it's really accurate under a certain resistance. It doesn't mean that you have to open a position in this level, all right? You need to calculate everything. You need to pay attention to the different things that the and the big picture, and then you need to make the decision. All right. One of the mistakes that many beginners, not only beginners, but even experts, what they do is they think they found a pattern, and which is a perfect pattern according to them, and they open a position no matter what. And this is wrong. You need to pay attention to indicators, directional indicators, timing of a trade, which is something that I talk about on my previous webinar, which you can find on Sunbird's website. So in order to understand patterns, you need to go over hundreds and hundreds of charts to be able to spot them automatically. I mean, today I'm going to draw some patterns, and your target, your goal is that eventually you won't have to draw these patterns on the chart, but you will see them automatically. Even more than that, as an expert, and this is the key actually to win the market, is to have the ability to see how a technical pattern is going to be completed even before it is actually completed. Now, I know it sounds confusing, and I will demonstrate how I do it, but my main goal in trading, and this is my motto, that follow me through the years of trading, that I try to get in the market before everybody does, and I get out when everybody gets in. All right. So just to go over a simple thing, this seminar is based on the Japanese candlesticks, and I don't know if most of you use them. In case you don't, let's go over them quickly. So we have the bullish candlestick, and we have the opening level, and we have the close level, and the closing level is above the opening level. That's why we call it bullish candlesticks. A bullish candlestick, or any kind of candlestick, can be a 5-minute chart, in daily chart, weekly chart, whatever. It doesn't matter what is the time frame. The meaning of a candlestick is the same. So what you do have to pay attention here in each candlestick that you're analyzing is the tails. You see here, all right, you have tails, all right, which are the lows and the highs of the day or that minute or whatever. This is the real story that a candlestick tells us. All right, the high and the low, which are the tails. All right, and we also have the bearish candlesticks, and the bearish candlestick is actually the opposite. The open level is above the closing level. All right, obviously we see decline here. The high and the low obviously not changing. All right, again, you need to pay attention for the tails, all right, or shadows. Some of you call it shadows, some of you call it tails. All right, and we also have another one, which is the dodgy candlestick, which means that the opening level is pretty much the same as the closing level. All right. So understanding the story behind a single candlestick can make actually the difference between a loser or a winner trade. All right, as I said, you should give the candlestick's tails extra attention. Why? We'll talk about it in a few minutes. And the best tip that I can give you when you analyze a chart, when you're asking yourself whether you should open a position or not, you check carefully the recent the last few candlesticks, and you try to understand who's on the upper hand, bulls or the bears. If you know how to spot who is winning this battle, your statistic will be amazingly improved. Alright? And this is what we're actually going to talk about today. Alright. Another important thing is, before we go on, is to understand what is resistance and support, which is basically the basics of technical analysis. Now, I show this slideshow, this specific slide, almost every seminar that I give, because it's the key to understand how sellers and buyers work. Alright, so we have here three levels, or 3 points. Alright, the first one, alright, now I'm going to talk about how does the resistance phenomenon works. The support actually is the opposite. So we have 3 points that we need to pay attention for. First of all are the disappointed buyers. If you take a look here at point number 1, alright, at point number 1, there were buyers that bought this. This one is the euros against the Swiss, but whatever. There were buyers that bought this instrument around the level, alright? And as you can see, the pair fell 100 of pips to this bottom at point number 2. Now, obviously they did not close their position, their losing position, and they pray to God that it will turn back to their opening level. So on point number 2, when this bottom is created, buyers are getting in. Who are these buyers? The buyers are the professional or lucky ones that just gambled. But let's say that these are the professional ones. So the experts enter here, right, point number 2. And when the pair start rising again until it gets to point number 1 again, alright, so the buyers from point number 2, they sell their position because they know that the buyers from point number 1 are about to close their position and make their resistance. So we have 2 causes for the resistance. The third one is the short players, the short position players, or the sellers. They're trying to, they see this resistance, they see the buyers from point number 1 and point number 2, and they figure out that this pair might fall again, so they open short position, which means that they sell it. So actually we have 3 causes. First of all, we have the disappointed buyers that had to close their position on their opening level. Second ones are the professionals or the lucky buyers that are taking profits of the trades that it opened on that bottom. And the third one are the sellers that are looking at point number 1 and point number 2, and they're estimating that it's going to fall again, and they are right in this case, and they increase the level of the intensity of the resistance. Alright, and support actually works the same, but the opposite. We have disappointed sellers and professional sellers, and then we have the buyers that are trying to take profits because they know that the support is going to occur there. Alright, so these are the basics. We need to understand why the resistance and the support actually happen, and how to look at the Japanese candlesticks. Alright, so the first technical pattern that I'm going to talk about, and actually there's nothing, there's not much to tell about each pattern. There's not any magic behind it. All you have to understand is what is the story that the charts tell you. And if you understand this story, I don't mind if you call it cup and handle or you call it whatever you want. The name is obviously doesn't matter. All that matters is that you understand what you are looking at. Alright, so as you can see, and I draw it for you, this one is the cup and handle pattern, which I write about a lot on my analysis on Forex Pros. And what is the story here, actually? First of all, as you can see, it's a bullish pattern. Alright, the cup and handle, it's a bullish pattern. How I can tell that? I can see that there is a resistance here, an accurate resistance. By the way, it's the chart of the US dollar against the Swiss, which is about to break out this resistance, and I've been following this pair for almost 2 weeks, and I'm really looking forward for this one to break. Alright, so what we can see here is the pressure of the buyers under this resistance. Now, after that you spot this kind of pattern, what you need to look for before you open the position, you need to look for an accurate resistance. Alright? No matter what you do, any kind of trade, any kind of technique, you need to have an accurate number that you can tell yourself, alright, if the pair goes above or under this pair, I will open a position. But you don't just open a position just like you felt like it. Alright? So in this case, you cannot see, but it's 0.93. Alright, this is the accurate level that I was looking for. So after you open a position, if you decided to do it, by the way, I usually don't like to open a position on such extreme levels. I will talk about it later. But let's say that you did, and you open a position after the breakout, if it actually occurred. The stop loss order that you need to set in your system, if you work with stop loss orders, should be set under the recent significant low. Now in this case, we can see two significant lows. Now the classic technical analysis would say that here the low one should be the level for the stop loss order. However, I don't like to lose. I don't like to have large losses. So I look for another significant low, and I put my stop loss order under it. So in this case, if the pair breaks through this resistance, I will put my stop loss order under this one. All right, and what we can see here actually is the following story. All right, so the pair tried to break through here. All right, obviously he got the resistance, and he fell down 100 of pips. Then he tried again, and again, as I told you, the resistance occurred again. Why? We talked about it a few minutes ago. But hey, look what just happened now. It tried to fall, but the buyers showed up here. They didn't let it to fall under this one, which means that strong buyers, and when I say strong buyers, I mean institutional, think that this is a good price to pick up this instrument. So they enter a position here and they try to pick up the pair around this level, and they don't let it to go under it. This is my first signal that I want to look for. You cannot hear me? Or all good. All right. So where was I? All right. So as I said, institutional trying to stop the declines here, and they're open their position around here. So this is the first signal that I look for. I try to look for where the first significant support appeared. And after I see this, I usually don't wait until the breakup actually occurs. I look for a potential entering level even before that. Alright, so actually what we can see here is a false break. You can see this short tail, and the pair tried to break through this resistance just a few weeks ago, and many amateurs opened their positions here, and obviously the pair fell down. Now I wrote to our clients, I think I wrote it on Forex Bird as well, that this is a very dangerous level for opening a position. It's very extreme, and as you can see here, this is the stochastic oscillator, which tells me that this instrument is overbought, and a correction might occur here. So the risk is too high. Now, so what do I take from this pair? I mean, from one hand, I tell you, do not open a position on extreme levels. And on the other hand, I tell you that something going on here. So I usually wait for this false breakup to occur, and then I look for another possible entering level. In this case, as you can see here, I try to look for reversing around this level. Alright, I will talk about reversing on the end of this seminar. So this is the first cup and handle. You need to understand that the low, the recent low, is higher than the previous one. And this is the first sign, this is the most important sign actually for the uptrend. Alright? So this is the cup and handle, and what you need to take from here is to understand that strong buyers are getting into the picture, and it's time to look for potential entering levels. Now, if we see a breakdown, if this red line, this red resistance, it's a bad sign, it's a bearish signal for the pair, and then we need to reorganize our targets for this trade. Great question, and the answer is yes. The question is if the resistance becomes a support after the breakup, and yeah. By the way, the reason is for that the same causes as here. As you can see in the previous slideshow, I talked about the three causes, right? So yeah. After the breakup, alright, the resistance becomes the support. And the opposite. After a breakdown, a support becomes the resistance. Alright, we continue. Alright, another question. Why don't you go short at the resistance? Well, first of all, you can. You can do it. The reason that I don't like to do it is I like to trade with a trend. And when you try to open a position, when I try to go short on the resistance, it's actually going against the momentum. Alright? It's going against the momentum. And it's not accurate. I mean, where do you put your stop loss? The stop loss order. Do you put it above the resistance? Again, there could be a false break that will shake you out and you will lose the trade. You know, so it's not an organized plan. You can do it, sometimes it works, and obviously in my example it would work, but I don't like to go against the trend. I mean, if I want to go short on something, let me find something much more bearish, like in this example. You know, the chances, the odds are with me instead of against me. So it is possible to go short at resistance, Likewise, it is possible to go long at support, right? It's the same idea. But I don't like to go against the trend. All right, so the opposite pattern for the cup and handle is the inverted cup and handle. And Andy, yeah, I answered. I don't think that you heard, but I said that your question was great and is correct. Resistance level becomes a support after a breakup, and the opposite. Supporting becomes resisting after a breakdown. All right. So the inverted cup and handle, it's the same idea like the cup and handle, but just the opposite. So here we can see a bearish pattern, and what leads here is the pressure of the sellers above the support, right? And what you need to look for, and in this example it worked really nice. I think it's example of the US dollar against the Swiss again, I'm not sure, but it worked great. We see a cup and handle, we see here an attempt of a breakdown, and instead of that the pair got the support, and many buyers entered the market here. The price rose until it got this pick. Again, what happened here? Institutional started to close their position or open selling position, short positions. And when you see this, I mean, the reason that I talk about institutional is that they drive the market, not the personal trader. So, in spite what everybody think, institutional don't trade against you. If you know how to trade with them, if you know how to spot their actions, you can ride on their waves. And this is actually what technical analysis is for. Try to spot the trends which are caused by the big players and try to ride on their waves. Alright, so we can see here the lower highs pattern, and again we have an accurate level. We can open a position under that level, and the stop loss order that we set is above the recent significant high. Alright, it's pretty simple. Again, I usually don't like to open a position in such extreme point. This one, before the breakdown occurred, it was extreme level. I mean, it was the lowest level that the pair got. So the chances for another buyers to get in this level are high. So I usually don't like to take that risk. I like to find much more wiser stop entry point. Sorry. Okay. So the cup and handle is actually a nice pattern. As I said, I don't like to open position in such extreme levels. However, in this pattern, the head and shoulders, I like it more. And why? First of all, as you can see, it's a bearish pattern. And here the story is pretty much the same as the previous technical pattern. Here as well we can see a pressure of the sellers above a certain support, and the idea is to open a position, a short position, under the resistance. Now the difference here, again, as you can see, obviously it contains the inverted cup and handle pattern here. But there's a slight difference here that makes this pattern much more stronger in my point of view. Alright, so we can see the head, alright, which is the middle it's in the middle. All right, we can see here the head. The support usually is called neck, and we can see from the right and the left the two shoulders. Now, what is that I like so much in this pattern? The story is that if you just don't look at the right shoulder, just look at the left one and the middle one, we can see a higher highs pattern, right? We can see high that goes another above the previous one. All right, higher highs. Higher highs is an important signal for a bullish trend. So before the right shoulder appeared, we had actually a beginning of a bullish trend. Now, the right shoulder told us lower high pattern. Now we can see that highs are getting lower, and this is a signal for a downtrend, and that is much stronger because we can see here an instrument that tried to start a bullish trend and eventually turn out to a bearish trend. Now many traders that see this, experts and institutional, understand that something has changed here and big sellers went in. And if you can understand the meaning of the story that I told you, I don't care that you understand the shape or the name of the head and shoulders. All you need to understand is that the pair tried to make a new bullish trend and eventually turn out to a bearish trend. Now, the distance, the distance or the target, and I say this, but it's not actually 100%, but usually the target should be the distance between the head and the neck. All right, as you see the purple arrow, the target, the target for the profit should be the distance between the head and the neck. In this case, this pair is the New Zealandian dollar against the US dollar, and we can see that it fell much lower than the initial target. So it was a really successful trade. By the way, everything that I show you here is just only charts that I published before. All right, I don't like to show examples, to be wise, to do back testing. I don't like to do it. I like to demonstrate things that I actually wrote about and published at the time. All right. So this trade produced to our clients something like 400 or 500 pips. It was a really great breakdown. All right, questions. When I open a position, okay, what you ask is regarding money management and how to manage a trade. And I made another seminar about this one, but I don't think that there is a record for this one. There will be another one on this issue about how to manage a trade after you open a position. I will make it, I think, on February. Yeah, 2 months from now. All right. So I cannot answer in one sentence for this question. It's a 45 minutes answer. All right. Yeah. Well, you need to set your stop loss orders, but you need to know what are your targets before you open a position. You need to know where you want to take the profit and when you want to close it. All right, the stop loss before you enter a position, because after you open a position, mentally, your ability are much lower. So you need to have a plan. And if you don't have a plan, it's a big problem for you. All right. So again, here we have the opposite. As you can see here, we have the inverted head and shoulders pattern. Again, this is something that I published just exactly 1 month ago, and this was the inverted head and shoulders, and it's a bullish pattern, as you can see. Again, it contains the cup and handle pattern, and the thing here, again, like in the previous example, just the opposite. And the story was that, as you can see, initially there was attempt for making a new bearish trend. We can see the lower low patterns, but eventually we can see, right, you can see here the black supports. Eventually we see here a bullish trend or an uptrend. All right, and this is what makes this pattern so strong, because we see a dramatic change on the trends. We see a sharp change between a bearish trend to a bullish trend. And again, and after many traders that see this, many of them set their position, their automatic orders above this resistance. Now, I don't know if you can see here, but this was at 0.9005. And here you can see, all right, that this trade was amazingly successful, and it gained 250 pips, and it actually worked exactly as I figured. You see the distance between the head and the neck is actually the distance to the target. All right, pay attention for this one. You see the black arrows? It's actually the same distance from the head to the neck, and then from the neck to the target. So now I don't know if this pair already broke through 0.93, but as I said in the beginning of the webinar, that I'm looking forward for this breakout. But again, and this is related to what I said on the beginning of the webinar, that I always try to look for levels that most of the traders cannot spot them. I mean, most of the traders are now looking for a breakup above 0.93. I was looking for a breakup above 0.905. I mean, again, I tried to open a position before everybody does, and now I get out when everybody gets in. By the way, you will be able to find this record, I think, tomorrow or day after tomorrow on Sunbird website. So don't worry about this one. All right, let's move on. Now remember that I told you, and this is one of the most important things that I actually realized during the years of trading, is that if I will have the ability to predict, and I'm quoting predict because actually no one can predict anything, but if you can see or forecast this pattern, you will be able to make money. If you will open the position on the extreme level, you will probably lose. Let me extend this one. All right. So 2 weeks ago, or 1 week ago, when the daily chart of the euro against the US dollar looked like this, this is what I published to our clients, and also in Forex Pros, I think. And I told them, I wrote them, that the pair will probably make the cup and handle pattern, the inverted cup and handle pattern. And this was a great opportunity to open a position and try to close it or take profit on half of the position on this support. Alright? So I saw with my eyes that this is going to happen. And if you're watching the euro chart, you see that I was right. Alright, this is extremely important. If you can acknowledge the ability to open the position here instead of here, then you will be able to make the real money. Because everybody thinks that they should open the positions here, but I believe that this is the level for taking profits. Now, in order to have this ability, you need to see hundreds and hundreds of charts and to actually understand how the market works. And it doesn't matter if it's the euro against the US dollar or any kind of pair. It's the same system. All right? Again, the idea was to open the position here. All right? Somewhere around here, actually under this red candlesticks here. See? And the stop loss order that I set was here, above the recent high, just like I told you 5 minutes ago. The idea is to take profit here, which is weird because everybody tried to open the position here. They don't even think to open a position where I said that I want to open my position. So maybe you will, after you see this webinar a few times, and you will be able to imagine how these patterns created, then you will make the real money. All right. Now this is how the euro charts look like. Yeah, Andy, that's true. Now, as you can see here, I was right, and the euro is about to go to 131.5. And many traders will open the position under 131.5. And what I'm going to do is actually to close my position there. All right? Did you get the idea? I mean, I know it's hard to understand, but all right. All right, questions. Am I looking for fundamentals? Yes, I do. I always try to get the atmosphere in the market. This is I get from the fundamental news, but I don't look for accurate potentially opening levels according to fundamental news. All right, I just try to get the atmosphere. It doesn't matter, Anup, if you trade commodity or currency or stocks or I don't know, whatever. It's the same method. All right, the same method. I actually, I always bring it up on my webinars that I started my way as a trader of stocks in the U.S. stock market. So it doesn't matter if I trade silver or Microsoft or euro versus the US dollar. It's the same method. Yeah. It's about patience. It's about having a real plan. It's about knowing what you're doing and having a real target. If you don't have a target, it doesn't matter which way you choose. I didn't say that. Albert Einstein did. But, all right. All right, let's continue. We have a few more things to go through. I think that, again, it's something that has to do with timing of trade. I think that most of the time what affects the forex market is the stock market, actually. And there is a negative correlation between the US stock market and the US dollar. When the US market falls, the US dollar rises. It's not 100% of the time, but that's what usually happens. So I think that is what drives the market, but it's not really important. I mean, it is important for making a really good timing when you open a position. But aside that, it doesn't really matter. I don't use actually this. It's not a strategy. It's a good question because I want to everybody to understand. What I'm talking today is about the patterns. I'm not saying that I open a position on the breakdown or the breakups. I just want you to have the ability to spot them and to understand the meaning of the chart, and you need to find potentially levels, opening levels, which are much wider than these extreme levels. As I said, I don't like to open positions on the extreme levels. Alright? Just again, understands what the chart tells you. Before you think about how to make money, understand what you're looking at. This is the basics. Alright? Good. Let's move on. So let's quickly go through the triangles. Yeah, great question, and the answer is yeah. Mohammed asks if it's valid through any time frame. Yeah, same from daily, weekly, 5. The story is the same. It's always the battle between the sellers and the buyers. So all right, just a second. All right, so another pattern that it's really important for you to understand is the triangle. Now, unlike the other patterns in which you can say theoretically that there are specific points to open a position, here it's not that obvious. However, it's much, well, I can't say it's important, more important, but it's really important to understand how it works. All right, yeah, I know it. So the triangle is actually a battle. Depends if it's ascending or descending or just a regular triangle. We will go through 3 of them. Here we can see a classic triangle. Now, this triangle is actually emphasized the battle between the sellers and the buyers. And when I see this, obviously before this instrument explodes, I actually can tell myself that something is about to going on. Let's say that we are here, and I'm drawing this line, this supporting and resisting line. I can actually predict pretty much accurately when the explosion will be. Alright? So I cannot tell if it will be downward or upward, but I can get prepared. I know that I want this pair on my monitor in the following days, because I know that something is about to going on here. So if you ask yourself sometimes, why do I lose all the winning or the great trades? If you know how to understand and realize that something is about to going on here, then you won't miss it. Alright? So this is a very important pattern, and if you understand here, there is the pressure of the sellers and the pressure of the buyers. Alright, pressure of the buyers and pressure of the sellers, and in some point they had to make a decision who is going to take the lead. In this case, the buyers are taking the lead. So you need to find an accurate level. Again, you don't just open a position. You need to find an accurate level, and after you do, you get prepared, you set your stop loss orders and everything. Alright? I really like this pattern because I know that something will going on when I see this. And again, we have on the same basic, we have the descending triangle, and it's the same story. Here we see just the pressure of the sellers. Alright? And the pressure of the sellers tells me that it's about to break down. Now, it doesn't necessarily... the webinar will finish in 5 or 7 minutes. We started a little bit late, and we will finish in 5 or 10 minutes. Alright. So, yeah, I understand. So, here we can see the descending triangle, and the story is pretty much the same. We see a lower highs and we see a pressure, and again there has to be a decision between the buyers and the sellers. Usually, because we see the lower highs pattern, it tends to go with the sellers, which means that the pair might fall. However, in this case, the Australian dollar rose. Yeah, it's a bearish signal. Again, it's not 100% sure, but it's a bearish signal. Here we can see the ascending triangle. However, it's not completed, but it's the ascending triangle. And here we can see the pressure of the buyers. They're pushing the price up, and there's the resistance pushing it down, and eventually it has to break through. Well, not 100% of the time, but it's a really good indicator for you. So again, when these two black lines meet, you know that something will going on. So you need to get prepared. You need to have an agenda. What are you going to do? Alright? Again, here we see the lower highs. Sorry, the higher lows. And the pressure of the buyers. It's really important for you to understand the role of each candlestick here, and the role of the buyers and the players here in this game. And if you can spot the meaning of the lower highs in this case, then you will be more confident to open a position. Alright. The sides are going to the extreme, yeah, to the extreme points, but in this case, this kind of points that I like to open a position, because I know that when the breakup or a breakdown occurs on these kind of patterns, it's usually very strong. It's usually not a false break. So it's not like when you open a position, you know, on the peak, historical highs of a cup and handle pattern. It's not the same. Here it's usually, as I demonstrated, it's in the middle of the trend. All right, so again, it's a kind of a pattern that not many traders see, and that's why the odds are with you. All right, here again, we can see the double top. And this will be the final one. We'll talk about the double top, the double bottom, and that's it. All right, so the double top pattern actually tells me a very simple story. The story is that the pair tried to break through a certain resistance, which was very strong for it, and after that I spot this pattern. I never try to predict if the top is going to occur or going to be created around a certain level. All right, never try to predict it. In this case, I want to see it after it happened, and after I spot the double top pattern, then I look for an accurate support. In this case, we're going to talk about the double bottom, and there I want to look for resistance. But here, this top tells me that very strong sellers don't want this pair to rise at this moment. And this indicates that you need to look for support and try to open a position under it. All right? It's very simple. And the other pattern, I will enlarge it again, is the double bottom. And actually this one is my best trade so far this year. And what you can see here is the weekly chart of the US dollar against the Canadian dollar. And I spotted here 5 months ago, I think, yeah, 5 months ago, the double bottom pattern. And then I started to look for a resistance. And I saw the resistance here, as you can see, it is 1.0. And I figured out that on the weekly frame, it should be a very strong breakup. And I was right. Now, what is the story here? The story here was that the pair tried to break twice, and it failed. And after it failed, many traders see it. All right. Again, I didn't try to predict if the bottom, when the bottom should occur or should not. I waited until it did, sorry, and then I started to look for the resistance. So the outcome was my best trade so far, 600 pips. Again, I wrote it to our clients. You can find it in our website. And this breakup was amazingly successful. It worked about 600 pips, and I took my profit there, and I was pretty happy with that. So this emphasized that if you know how to understand, the pair or the chart and the battle between sellers and buyers, you can win the market. And this is my best tip for you today, right? Try to understand the game between them, and you will win the market. Yeah, 600 pips. All right, so we talked about several patterns. There are many more. I hope you got the idea of the concept that I try to talk about. I don't care about the shapes themselves. I don't care about the resistance. I care about the way I look about the charts. I hope you enjoyed it, and you will be able to find them. You will be able to find them on our website. You can log on to, I will write it down for you. You have, after you log on, you will have the educational center, and you will see a webinar. All right, my webinar, my previous webinar is there. I think another one, and that's it. A good book. Well, I did read a book. I can't remember its name. I think you can send me an email and I will answer that. But it's a book about stocks. But it's the same thing, so I can recommend it. So you can send me an email and I will answer that. My email is Bas. You can sell it to the sales, and they will, to the sales department, and they will forward this to me. Sales at Sunbirdfx. All right, send your email, whatever you want to ask or know, and they will deliver this email to me. All right, any more questions, guys? Next webinar will be, I think, January the 1st. No, the 12th or the 14th. And it will be about 7 golden rules for the novice trader. Though I think it will be relevant for any kind of trader, novice or UB or experts. All right, you had 3 questions. Psychological number is a round number, such as 1, such as 1.5. You know, many traders look at this kind of number and they set their orders around this level just because it's much easier for them to set their orders at 1.5 instead of 1.47, for example. So it has a psychology number. And you know, even the press or the financial communication they won't write about 147, they will write about 1.5, right? Automatic trade orders, simply as it sounds, automatic orders when you send to the systems future stop loss orders like this one. Yeah, there is a triple bottom and triple top. It's the same idea. I didn't want to waste your time on this one. It's the same idea. It's more rare than the others. All right. So thank you very much. Hope you enjoyed it.